Mani, welcome to the podcast. How are you doing today?
Doing well, Aditya. Thank you so much for hosting me. I'm very pleased and honored to be here. So thank you for the invitation. I'm really looking forward to this conversation.
This conversation is going to be very timely. But before we jump in there, let's talk a little bit of what we do. So Bits and Banks is the Digital Disruptors, the show where we get candid with C-suites on how digital transformation is changing the lives of members and customers one bold idea at a time.
Right.
Our mission is to spotlight real stories for digital transformation, the wins, the pivots, and also lessons that we learn from failures from frontline mid-market credit unions executives. And thanks, Mani, for being here. I want to talk a little bit about Mani before we jump in. So he's Mani before he jumps in. Mani is the Chief Risk Officer at Patelco Credit Union, a trusted advisor to startups, and a powerhouse in the world of banking and fintechs. He brings the kind of energy to his career that most people reserve for a racetrack. Now, I got something here for Mani that I want to talk about. Are you ready, Mani?
I am. Thank you, Aditya.
I hear you're a speed car fanatic. So when it comes to member experience, are you always chasing the pole position at a credit union?
Aditya, well, first of all, thank you for the graceful introduction. Me being called a powerhouse is an awful honor. I'm sure others around me may disagree. But now to answer your question, it's funny you bring that in. I think you know a little bit about my background and my wish of wanting to be something else other than a risk practitioner all my life. But on a more serious front regarding our members, it is tough to always be first out here, especially in the world of credit unions where we have a different risk profile, right, than a lot of fintechs and other organizations that are competitive landscape. It's okay sometimes not to have pole at the beginning. We obviously don't want to ever be last in everything. But I think when you look at the portfolio, if you're first in some things and maybe second in others, we won't complain necessarily. In the dynamics around us, it's tough to always be best of class in everything. And that's okay. That's more on the professional front and personal front as well, as everyone in my home would tell you as well. I'm not the best of everything for sure.
Nor is anybody else, but you kind of bring an interesting yin-yang, right? So at Patelco, you're controlling, building guardrails, managing risk, and then you want to get on the racetrack and kind of put your hair on fire, right? So that yin-yang is very powerful. All right, let's jump right in. So the context of the discussion today, just to set that up, member personalization is very critical in the life cycle today as credit unions, small and large, look to maintain and grow their relationships with their members, and especially in a world where they're competing heavily against fintechs and tier ones. Just acquiring the member at the top of the funnel or the top of the journey is not sufficient. You need to build that member loyalty brick by brick, by actions, by knowing your members and generating that loyalty, because that's what really builds fulfilling lives for the member and profitable relationships with the credit union, candidly.
Absolutely.
So you're going to focus today on something, a beautiful word or phrase that you coin, and I'm going to start that as the first question. Okay. How do you define member relationship vectors and member relationship vector? And what are the most important elements credit unions should focus on as they look to personalize the member journey across their life cycle?
Yeah. Aditya, thank you so much for the question. You are right. In my own words, when we talk about the membership relationship vector, I feel it's a way a member relationship, a member actually interacts with us, with the credit union. And it goes beyond just credit unions that are here. I think a lot of other practitioners that may be listening in from fintech or banking would say the same thing. Mm-hmm. It looks like how they use our services, their financial habits, what products they use, how loyal they are. I feel like it's a multi-dimensional representation of the engagement, the financial behavior. And I'll talk about this probably a little bit later, about the life cycle stage that the membership is in. Mm-hmm. It can include, to answer your question, transactional history, engagement metrics, demographics, what products they're using. Really, I view these as loyalty indicators, to kind of coin that phrase, right? So you look at a lot of things like data-driven insights, which I'm sure we'll talk about a little bit. And really the relationship culture between us and the member Certain members will never want to leverage us for certain products. As an example, people that may not have kids, for example, may not worry about 529s or education, right? Others, grandparents might. So it's really important to constantly double down on the relationship. And with all the data that's out there here, like it's table stakes now for us to really work on this member relationship vector and capitalize on it, which is a two-way street for just not us, but also the member.
And do you, as it relates to that, what pops in my head is what you measure, you perfect, right? That
Yes.
idiom. So from that perspective, as you think about it, do you have scorecards where you on these member relationship vectors, and this could be at Patelco broadly as you think about best practice, do you think about scorecards about how do you measure? And if you measure, then you're able to refine your processes and steps so that you get high marks on your scorecard.
Yeah. I mean, I'll tell you some metrics that jump out, and none of them are going to be earth-shattering.
Yeah.
I think you had mentioned like NPS, the Net Promoter Score comes up. A lot of people do that. I think member retention rates, their satisfaction score are table stakes, as I said earlier. Like those are things that a lot of people do. I think one of the items that really we should start tracking, and a lot of us do, is frequency of member interactions, right? So, for example, if a member is continuously coming in looking for mortgage rates or HELOC rates, we should do something with that, right? I think those interactions are something that are newer in the digital space we're in, because you can really easily jump on an app or online now, and you don't have to call in. I think product penetration, which products they are, cross-sell ratios. These are metrics that are good to track, right? And then that lastly, and I hate to say, it's like really the surveys that we have, right? A lot of us get feedback loops regarding how do we like the app, et cetera. So really being centered on personalization based on member feedback and making sure we do it, right? Now, we can't do everything every member wants. That's impossible. But really, I think if there are thematic responses or feedback from members, we absolutely have to listen to those things, right? So those are some metrics, for lack of better words, that kind of jump out when we talk about these things.
Before I jump into question number 2, another thing that popped in my head when what you were saying is member relationship vector requires cross line of business or even cross-functional group collaboration. It's almost like when you're in an MBA school, you come together to solve a case study, and then you you take 7 perspectives, and then you kind of put it all together coherently to solve a problem. When I think about optimizing member relationship vector, I'm thinking upfront, prospecting team, distribution, underwriting, both from the business and the risk side. Then once the member comes on board, being able to really monitor the things that you mentioned. Somebody has a life event, let's say a kitchen remodeling. Well, it's not a life event, but an event, and then they have a child and so on and so forth. So, really being able to run this cross-functionally and not look at it as either product silos or growth versus risk silos or lending versus risk silos, those kind of things. You have to really, these cogs have to intermesh very well. And organizational structures have to be set up in place, and flow of information has to happen without any bottlenecks and dams. That's so critical. Any thoughts on that? Because without that, you really don't optimize the member relationship vector. Right?
Yeah, so absolutely. So one comment you made about the life event in the kitchen. Listen, if you're a bad cook, that could be a problem. It could be a life event. So that could be the reason why that happens. So I want to give you some credit. That could be an issue there. Regarding this question, you're absolutely right. I'll tell you, like, having been in risk for as long as I have and seen the trajectory, it's amazing that items like trust, privacy, which were deemed for a long time to be risk elements, are now they're just basically blocking and tackling for our members or for prospects, right? So you're absolutely right. The journey from all business units needs to be very cohesive. Risk, for example, on products, new services needs to be at the onset, right?
Yes.
I view risk, and I've said this even here, where I work, it can be fuel for growth. Like there's always these analogies used of like very fast cars, and rarely do people talk about super fast cars without talking about brakes, right? They just don't. But I view risk management or any of these sort of defense elements as being brakes that you don't want to constantly use, but it allows for you to go faster. So absolutely, I think when it comes to analytics, when it comes to the digital journey, I think bringing on the business units at the onset helps with sort of the implementation, helps with the rollout, so that you don't have necessarily all the pain points later when the actual members are interacting with us. So I do think from the ideation stage to the actual syndication and the sort of thoughtfulness regarding implementations, absolutely, it can't be just one business unit any longer. It has to be
Correct.
all of us. And I'll give some examples of that later, when we talk about some of the other questions.
Yep.
Because especially nowadays, Aditya, like everyone's worried about their digital footprint, members, us, all of us. So, and risk is a big piece of that.
Great. And let's actually go right there. So the second question, which kind of dovetails to what you just said in the end there, broadly speaking, how should credit unions, and this is something that you can provide your wisdom to the credit union space or movement, is how should credit unions identify key moments to offer the right products or interventions/treatments, and what channels, tools, processes, like how do you instantiate this? How do you get this to execute and implement? Which, to your point, does not need to be 9.5 out of 10, but if you're scoring 7+ across these dimensions, you are on the fast track, right? So any thoughts and things around those would be very helpful. And maybe some examples also,
No, absolutely. I mean, that is sort of the how. And I talked about this a little bit earlier regarding engagements. I feel like there's a lot more engagements happening from members to all of us, not just credit unions, fintechs, et cetera, and really capitalizing on those items. I think, using AI, data analytics to identify key financial moments in a member's life, that is critical. I feel like it allows for us to be more predictive, more proactive. So as I said earlier, if somebody's looking for specific things online or digitally, paying attention to that. But I'll give you a couple other examples since you asked. And I think my apologies in that it's going to have a little bit of risk tentacle, but I do think it's additive as well. Is that, for example, payment trends. I think a lot of times we have access to payment trends, and you could have an individual, right, that's been making full payments plus some on whether it's a credit card or auto loan or mortgage, and all of a sudden that trend changes, right? We view that as something that has been triggered, right? Yeah. Maybe individual is getting married. Maybe the individual has a child, right? Sickness, et cetera. And I think, going back to a conversation you and I had some time ago regarding delinquencies, I think it's a very sad topic. It's very real for a lot of people, but it's embarrassing, right? Yes. We rather engage clients before they get delinquent because there's a lot more sensitive conversation. So if you actually look at analytics, predict what's happening there, yes. I think it's great to engage somebody. They have a child, they're making less payments. Hey, can we help you with a 529 plan, right? So I think at the end of the day, there's like 4 things I would kind of put out there regarding specific. I think you get personalized support, as I'm sort of talking, right? Members receive like tailored financial advice, product recommendations based on unique needs, behaviors that's happening, right? Secondly, time is money. It's timely assistance going back to 30, 60-day delinquencies. You want to front run and be ahead of those things. So, identifying financial moments, key critical, events have happened, whether it's buying a home, whether somebody lost a job, unfortunately, the stress now, right? Yep. I think and doing it timely is important to get in front of that. The third is just service experience, right? When you know your customers, much like you and I, our customers are plenty of places. When somebody knows your name, hey, Mani, hey, Aditya, or they know about your family, or they know, what's going on, that will give you better service experience, like on various fronts, and it adds the loyalty, right? The last thing, obviously me being the risk geek here, is just security from information security perspective, right? AI can help detect unusual activity, like is this Aditya or somebody else that continuously is logging in? Why are they logging in from 15 different locations, right? So protecting members from fraud, financial, threats, etc. That's the last benefit that comes from really identifying trends and being proactive and really focusing on the relationship vectors we've been talking about. So those are like some examples to come to mind. You've seen chatbots, for example, Aditya, really we go on websites and they pop right on the lower side or left side and you hear something, like really leveraging that and really getting that, cohesive sort of process flow where somebody's in there and they chat and saying they want a 529 plan. You immediately have, content there, automated, and the connectivity to a consumer service or a
Yes.
human if needed, right? Getting that optimized is huge this day and age because it's all about velocity and getting as much as you can as quickly as possible from a member perspective.
That is, I agree. And while you're doing that, Mani, if you wear your risk hat, you also have to make sure that as you're driving this with speed, you're making sure exactly like you said earlier, very nicely, is you got to have the brake systems are good, are robust. So those
Right.
guardrails have to exist. Now, hopefully nobody's bumping up against the guardrails.
Right.
But as you're moving and are delivering this contextual capabilities, products, or offerings, you got to make sure that the guardrails are tight. So
Absolutely.
on a chatbot example, if I ask a question that is completely unrelated to Patelco,
Yeah.
I need to make sure that the chatbot is not being overly enthusiastic in responding to that. I just, like, I don't know anything about this, but I can tell you about jumbo loans at Patelco, right? That kind of
Right. Right.
mindset, right? So that is
Yeah.
also so critical.
Absolutely.
Yeah. Yeah.
Absolutely. I mean, the development of AI tools and analytical tools that here is basically something that needs to be done very harmonized and very deep and focused. The evolution is so fast now in the world of analytics and AI, and that could be good or bad. To your point,
Yeah.
the engagements need to be appropriate because just like you said, Aditya, if the chatbot completely misses on the mark and you're asking about 529s and it's pitching you, real estate mortgages, I think pretty quickly you'll have the member have a bad experience, and losing trust, unfortunately,
Yes.
these days is much tougher than gaining it, right?
Yes.
It's actually more impactful than gaining it. So it's really important to make sure you get that done right.
So in that sense, it's almost like you're on the edge of a sharp knife. You want to make sure you use it, but you don't get cut. It's very easy in today's world. To your point, one bad digital chat interaction can undo 6 months of building it brick by brick. Literally.
Absolutely.
Right?
Yeah. Sadly, that's the world we live in. And that's just the human element, right?
Yes.
It's like that professionally, personally on every front. So, yeah, trust. I mean, the word gets thrown around a lot, but I think it means a lot in the world of financial services, no matter where you're a credit union, fintech, et cetera, right? So, yeah, it's definitely a very dynamic world we live in, and it's fun to be on this side of it, I must admit.
Yeah. Keeps you young and honest. Okay.
Yeah.
I got my last question for you.
Huh?
What is your vision about the next level of innovation in credit union? Let's just call it the CU 3.0. If there's one thing that you could pick up, you could wear a growth lens, you could wear a risk lens, what have you. What is like one thing that you would say that credit unions should really be focused on broadly as a movement?
Yeah. I'll tell you, there's a couple of things that come to mind here. So I think for those, the audience that's listening in, it's important to first of all just define like what we call CU 3.0. Ultimately, like I feel like simplistically, it's deepening human connections through smarter systems, like using technology, not to replace the relationships, but to enhance or augment them, right? To augment the individuals. I feel like it's a future where credit unions or just other institutions remain true to their values and mission, because that's what makes credit unions loyal, while evolving to meet the expectations of the digital first landscape that we're in and how competitive things have become, right? So I feel like it's where relationships, trust, technology are converging. That's sort of the way I view it. So a couple of things come to mind. One of them, like I sort of touched on earlier, is like real-time services is something that's critical here. Like I feel like when anybody's engaging, really trying to get to the answer as soon as possible when the iron is hot, from a wording perspective, that is critical because it will help quite a bit regarding the member feeling heard, et cetera. I think a second sort of this is my own sort of conjecture here, so obviously keep it for what it is. I think it's going to actually increase quite a bit of collaboration. I think we're already seeing it here in the credit union space regarding us engaging with other fintech partners, as opposed to really looking at the competition's competition. I think we're going to see a lot more synergies where you're going to have credit unions, banking, and fintech starting to converge on solutions. So as opposed to us building our own, I think what I envision happening is a lot more fintech collaboration where there's strategic partnerships with innovative startups to expand offerings. I think these things are going to start happening quite a bit more with this 3.0 and the next wave of innovation that's going to come up. So those are just some things that come to mind, when we talk about
One thing that popped up in my head when you brought up that last point, and then we can end the podcast on that, is open banking as a foundation pillar of data was the big hub in the last, let's say, 3 years, right?
Yeah.
And a lot of investments, protocols being built, spec documents being written, and requests for feedback, etc., etc. Do you see, in some senses, this open banking requirements and capabilities being built out? Are they still on track? Is there same level of intensity, or has it petered down a little bit? Would love your candid, because that's going to be the foundation for where all of these different fintechs and banks can really collaborate on with easy share of data. What's your thought?
I appreciate bringing that. I thought about that as well. It's funny, as I was thinking about this question, open banking came to mind. I feel like open banking, to your point, has happened and has evolved so much that the reliance is there, and I think it's still ever present. To answer your question regarding my opinion on it, I think it's still there. I think it's relevant. I think the buzz around it and just the vernacular that's used and the talk about it has faded because it's just become sort of normal, in regards to secure data sharing, that empowers organizations, with more control and access, to financial service platforms, et cetera. I think these things are happening so much now that people talk about it less. I do think you bring up a good point regarding what's the next layer of sort of open banking. What's the next sort of vernacular that's going to pop up regarding data? Because at the end of the day, in a weird way, Aditya, like what I envision is going to happen is we're going to be cloned. Like, I feel like, eventually you're going to have organizations that are going to have a duplicate version of Mani that's digital and it knows everything about me and similar to you, Aditya, where you live, who's related to you, like where you went to school. I have a feeling with all the data and open banking out there that financial institutions and institutions holistically are going to know a lot more about us, where you're going to have almost like a virtual version of you that's out there. True. So that's just, something that I think eventually will happen. So it may even be a better looking version of me too, Aditya.
Come on. Yeah, I'll put you there 8.5 out of 10 right there. So
well, I'm glad. You may have to get some glasses, Aditya. I really appreciate the sweet lies.
That is a strong point to end this podcast on. All right, great, Mani. It's great interacting with you, and appreciate the candor and the preciseness of your responses. I think that mindset about thinking about members as relationship vectors, which are, and I'm giving my analytical mindset of multivariate in nature, and then having the ability to kind of streamline, harmonize, and put the cogs in the wheel across various functions with one objective to really maximize and enrich the lives of the members is very critical. I know there's some cliche in what I said, but you really have to put these in place to really become best in class. And in some senses, and this might be a bit controversial to end it on, is if credit unions are not, or mid-market institutions broadly speaking, CFIs, are not able to do this, they are going to continue to fall behind large banks and aggressive fintechs. Absolutely. And the gap might get to a point where then you have very adverse consequences. So this is not a nice to have, this is a need to have. Right?
Absolutely. Aditya, well, listen, it's been great, stealing some of the virtual oxygen here, and always enjoy our conversations. And thank you for the host, for hosting, and I look forward for future collaborations for sure.
Thank you.